Hello, everyone, and welcome back. I'm here to assist you in learning how to control your money and accumulate wealth. We're going to discuss how to generate wealth during a recession in today's video. Recessions occur periodically. In fact, we may be in one at the time of recording. Yet for people who are well prepared, they actually present enormous investment opportunities. The Warren Buffett cliche, "Be fearful when others are greedy and greedy when others are fearful," is one that we have all heard before. However, I'm going to say it anyway because it is still entirely accurate and correct. So in this video, we'll discuss 3 asset classes that could be utilized to accumulate wealth during a slump. You must comprehend how to calculate your net worth and what it even entails before we can discuss the 3 asset classes I want to discuss for expanding your wealth during a recession. Nobody cares if you ask each other how much money you make annually or what your salary is. The actual eggplant measurement contest is all about your net worth. In any case, net worth is essentially just assets less liabilities. There is no other way to put it. Yes, you may be creative with some accounting and business metrics like net value, but in the end, it's assets minus liabilities. For example, a couple in question has a $250,000 home, a $100,000 investment portfolio, and 2 vehicles with a combined value of $25,000. Nevertheless, they do have some obligations that go along with these assets. Despite the home's $250,000 value, they still owe $100,000 on the mortgage. Their investment portfolio is also plainly not a liability. Finally, they have 2 cars, one of which has a $10,000 car loan. This couple's net worth would be calculated by taking their assets and subtracting their obligations. Simply adding up their total assets, $250,000 plus $100,000 plus $25,000 less $110,000 gives them a net value of $265,000. Having said that, you are now aware of how to determine net worth. Moving on to the first asset type for wealth creation, real estate. Everyone is aware that more millionaires have been made via real estate than through any other asset type. Therefore, here are some clever deals rather than some bizarre, sleazy pitch to encourage you to buy real estate. What I'm going to do is actually just give you a real-life example of someone I know. These are real numbers, obviously rounded a little bit here, but I know someone in 2013 who actually purchased a number of HUD properties off the auction site that required little to no upkeep or maintenance and very few repairs, and they're in B-class rental neighborhoods. He owns about 5 of these. Therefore, in this instance, the purchase price was actually $30,000, and he probably paid cash. The rent has increased to at least $1,000 per month during the past 30 years, and the value of the property has also increased when he purchased it in 2013 to roughly $100,000. Let's analyze this. You have 2 options here. Either you maintain the property for cash flow or you sell it for a profit. You can either keep it as cash flow if you want to have 4, 5, or 6 of these things, or you can flip a property and make a great huge chunk of capital gain for very little skin in the game. Imagine receiving $6,000 in gross revenue each month. After paying for some expenses, you could theoretically be financially independent and earn passive income. You could go out and enjoy margaritas on the beach. When it comes to running a rental property, there are absolutely no headaches. This is one of the best ways to increase your wealth during a decline. And the wonderful part is that the investor now has a dividend that pays. He can sell, and they can sell too. Speaking of dividends, the second most favored asset class will now be discussed. With blue chip dividend stocks, one can increase wealth throughout a recession. Let me know in the comments if you have any other questions about investing. Let's return to the video. This isn't a get-rich-quick scheme, and you won't wake up 5 years from now and be a multi-millionaire blue-chip dividend stock investor, which is why I favor blue-chip dividend stocks during a recession, because they're ultimately a terrific method to produce passive income later in life. This will require a lot of effort and dividend reinvestment, but the payoff will be worth it in the end. I prefer this during a recession because even then, underlying firms are often still strong. That's why they're blue chip and not some fly-by-night company. The price per share has been drastically reduced. Dividends have been paid for the past 2 years. Companies that have regularly increased their dividends year after year for at least 10 years meet my criteria. When it comes to dividend aristocrats, I usually prefer 15, 20, and 25, but in this case, we're looking for 10 years of dividend increase. You should aim for a dividend growth rate of at least 2%. This is because CPI, often known as the rate of inflation, has been around 2.5%. So I am looking for these dividends to at least stay up with the rate of inflation, so that my purchasing power is not being diminished. Last but not least, we're searching for a price-to-earnings ratio of less than 20. Usually, I aim for 25 just to retain some skin in the game, but that is getting a little pricey. Generally speaking, you want to seek for a PE ratio of 20 or less. Last but not the least in the criteria, low debt to equity. I'm seeking businesses with low debt to equity because I don't want to invest in Boeing or any other business with excessive financial leverage. Everyone has seen what happened with Boeing. They will likely be bailed out and everything will be fine. But after the recession, you can't always rely on monetary stimulus. These are my standards, with blue chip dividend investment coming in second in the asset types. Let's discuss the third asset type, precious metals. Although precious metals aren't going to make you rich, many people believe that they are the only kind of true money left in the world when compared to fiat money. People choose gold because its hardness corresponds to how hard it is to create money, not because gold is physically hard. In fact, it's a fairly soft metal. Fiat money, sometimes known as the US dollar, is relatively simple to generate and can simply be printed out of thin air. This is soft money. People choose gold because it is a physical currency that requires work to get from the earth and cannot be produced instantaneously. It is frequently seen as an inflation-proof shelter. People want to own gold because it is a hedge against inflation, and these prices often increase in a recession, which is what happens when nations or governments are simply printing out money out of thin air. Gold and silver really experienced significant declines throughout the recent recessions and market busts, such as the dot-com bubble and the recession of 2008, before skyrocketing after the spread of fear in the economy and in society. You should therefore look into precious metals once again. They are for constructing a well-diversified portfolio and wealth development, not for becoming wealthy quickly. The final bonus piece is invest in yourself. This seems cliche, yet this is really true. You need to invest in yourself. People are regrettably laid off during recessions, unless there's a $6 trillion stimulus package, which you would think would never materialize. You usually have some free time when people lose their jobs. Depending on whether you can find another job or not, you go through a variety of emotions, starting with excitement and ending with depression. However, what matters most is that you find another job. When you have additional time on your hands, or when there are economic downturns where you could lose your job, invest time for oneself. If you lose your job, pick up a new hobby or establish a side business. Spend quality time building ties with your network that you may have ignored over the years of just working for one company. Go to LinkedIn. Create a link if you don't already have one. Then start connecting and contacting people to build solid relationships. Also cultivate relationships with the people you love and your family. Family is the best source of support through difficult times. And that ends today's video. Hope you have learned something from this video. What are your thoughts? Comment down below. If you enjoyed this video, make sure to click the like button and also don't forget to subscribe to the channel and hit the notification bell for you to be updated on our latest videos. See you in the next video. Thanks for watching.